The stock market is a device for transferring money from the impatient to the patient. Warren Buffett. But here's the problem. In 2026, everyone wants to get rich by Friday. The market right now feels like someone who drank 3 energy drinks, downloaded Robinhood, and decided they're the next Warren Buffett. AI stocks flying, crypto waking up again, gold hitting record highs above $2,400. And somewhere in the middle of all this chaos, you've got $100. Not $100,000, just $100. Which raises the real question, is $100 even enough to invest anymore? Or is it just financial pocket change? The answer is actually surprising, because history shows small investors who understand cycles often outperform the crowd.
Let's rewind for a second. Back in the 1970s, investing was basically a rich person hobby. You needed thousands just to open a brokerage account. Then came the internet. Then came discount brokers in the 1990s. Then apps like Robinhood and Webull. Now, you can buy a slice of almost any stock on Earth with $5. But the bigger shift isn't technology, it's market cycles. Because 2026 feels suspiciously similar to 2 other periods, the Nifty 50 bubble of the 1970s and the dot-com bubble of 1999. Back then, investors believed these companies will grow forever. Sound familiar? Today, the Magnificent Seven, Apple, Microsoft, Nvidia, Amazon, Meta, Tesla, and Google, make up roughly 30% of the S&P 500. That's massive concentration. It means the market looks strong, but underneath the surface, things are more fragile, which is why how you invest, even a small amount like $100, actually matters.
Let's talk about the numbers. Right now, the S&P 500 trades around 24x earnings. Some AI stocks, closer to 40 to 45x earnings. Meanwhile, the U.S. national debt just crossed $34 trillion. Interest payments alone are approaching $1 trillion per year, and central banks quietly bought over 1,000 tons of gold last year. Translation: the financial system is swimming in liquidity, but also uncertainty, which means the biggest risk today isn't missing out, it's blindly chasing hype. So if you only have $100, your goal isn't gambling. Your goal is learning how the system works. Think of it like financial training wheels.
Let's get practical. Here are 5 ways to deploy your first $100. Buy an S&P 500 ETF. This is the boring answer, which is exactly why it works. The S&P 500 has returned roughly 10% annually for 100 years. That means $100 today becomes about $1,745 in 30 years if the trend holds. Not sexy, but incredibly powerful. Think of it as buying a tiny piece of the entire U.S. economy. Buy fractional shares of great companies. You don't need $1,000 anymore. You can buy $20 of Apple or $25 of Nvidia. This lets you learn how individual companies move. Just remember, buying great companies is different from chasing hype. Buy gold or commodity ETFs. Gold has been money for 5,000 years. Central banks bought over 1,000 tons last year alone. Why? Because when debt rises, currencies eventually get diluted. Gold acts like insurance. You hope you never need it, but it's nice to have. Invest in yourself. This sounds cliche, but it's statistically the best return. $100 can buy books, online courses, skills like coding, AI tools, or finance, and skills compound faster than markets. Warren Buffett once said the best investment you can make is in yourself. Start a market learning portfolio. Split the $100, maybe 40 index fund, 20 tech stock, 20 gold, 20 experimental play. Now you're not just investing, you're learning how markets behave, and that knowledge compounds.
Here's the truth most finance influencers won't tell you. $100 won't change your life overnight, but the habits you build with it might. Because the real edge in investing isn't finding the next moonshot, it's surviving long enough to compound. Markets will always swing between fear, greed, and confusion.
Your job isn't predicting the future. Your job is staying rational while everyone else loses their mind. Start small, think long term. And remember, the goal isn't to get rich quickly. It's to get rich slowly enough that you keep it.